What's up, guys? Doug Polk here, and today we're kicking off our first cryptocurrency podcast. I know we've done a lot more pre-recorded videos, talk about various subjects, but I felt like I wanted to get a podcast going, get some of the more reputable and intelligent people in the cryptocurrency world to come on the air and help explain some things. I'm always straightforward with you guys. I'm still pretty new to the space overall, and it's always good to get some more technical information or people that have been involved in cryptocurrency for a long time that have a lot of knowledge. And that's definitely the case here today, as we are joined by Jimmy Song, a Bitcoin developer and cryptocurrency YouTuber. Looking forward to a lot of the topics we got coming up today. We actually have a list of some of the ones we'll be discussing in the description below. But before we jump into that, I want to quickly let you guys know that this is going to be the last podcast and only podcast on my main channel. I'm going to be moving it over to my cryptocurrency podcast channel. It's a separate channel. The reason I'm doing that is I feel like the content type is a lot different than some of my edited videos. And I want people to have the option of deciding, what they want to watch or watch both or whatever. So this is basically your last chance, final warning. If you want to continue to watch these podcasts and hear more about what's going on in cryptocurrency, I'd strongly recommend checking that channel out. We're going to be doing our second podcast next week, where we'll be joined by Jason Les. We're going to be talking about Bitcoin, as well as some other subjects too. So make sure to check that channel out. Make sure to follow and subscribe over there. And let's jump into it today. So Jimmy, thank you very much for coming on the podcast. Great to have you on today.
Yeah, thanks for having me. I've been a big fan of yours, and I like watch your poker videos, and I didn't even know you were into crypto until recently. So being asked to do this is it's an honor.
Thanks, man. I actually want to kick it off by saying that, from kind of the get-go, while watching a lot of stuff about cryptocurrency, when I was first trying to decipher, who I wanted to watch and listen to, I came across your YouTube channel, and I'd wake up every day for the morning brief and listen to what you had to say. So I definitely appreciate, the work that you put out there in terms of, content, but then also, of course, on the development side with a lot of the work that you do with Bitcoin.
Yeah, I'm glad you watch. I didn't realize that so many people are watching. It's kind of crazy how once you're on YouTube, people suddenly start recognizing you and stuff. So I'm sure you know what that's like. It's kind of a crazy deal.
Yes, it certainly is a little bit of a game changer. But let's actually just jump in here. I want to start off simple. I want to start off with something for people that are just brand spanking new to cryptocurrency. They're just learning about Bitcoin. They're just learning about this entire world, right? So do you want to maybe just kick this off real simple with what is Bitcoin and why people should care about Bitcoin?
Sure. So Bitcoin is a lot like what your bank already does, right? Like when you deposit money to your bank, they don't go and take your $50 and put it into a box that says, Doug or whatever, and just keep it there. That's not how it works. They have something called a ledger, and they take the $50, put it in their bank vault, and then put plus 50 to Doug's account. And that ledger is very useful because you can now transfer money to somebody else, saying, okay, here's a check that I'm going to write, and it's going from Doug to somebody else, to Alice or somebody. And that's $50 that it's minus 50 from Doug's account plus 50 to Alice's account. And that sort of ledger technology, just the very base ledger, has been around for a long time. And, if you look at history, that's like some of the first writing that ever happened was people keeping account of how much people owed to whom. The idea behind Bitcoin is that instead of having one ledger per bank, you have a global ledger that you can use to sort of settle accounts or whatever. And you can have sort of instantaneous or more or less instantaneous payment from one party to another instead of sort of going through this complicated US centrally controlled system that you have in most countries. So what Bitcoin is it's money that moves at the speed of information, which is really, really nice for the purposes of a lot of things. It's not like gold, which has to be physically moved. It's not like US dollars, which are more or less centrally printed by the US government. It's dictated by math and code, which is great.
Yeah, that's actually one of the things that I like most about it. It's more of a belief in math and algorithms than in people, because Math won't backstab you. So let's actually talk about some pros and cons of Bitcoin, because I've been in Bitcoin for a few years, and actually, when I first got into Bitcoin, it's kind of funny. I mainly got involved because of its utility. As a poker player, oftentimes you want to move money, and you're traveling around the world or you're going wherever, and so having something that's that liquid, that doesn't rely on a third party to facilitate the transaction for you. Well, I mean, I guess with mining, that is happening, but rather to approve or allow you to make those transactions. It just had so much utility to be able to move money around like that for a poker player. So I kind of like luckbox stumbled my way into Bitcoin in 2013, and over the course of time, I was like, oh, this actually ended up being an investment, even though that wasn't really where things started out as. So some of the pros, like it seems like not allowing someone else to control your money is a huge plus. As a poker player, I've definitely suffered from times where people, banks specifically, have banned me. I got banned from Bank of America. They held a lot of my money. They don't have to tell you anything. So I just was basically waiting for months just to hope that I get my money back, which sucked. So, obviously you prevent people from controlling your money. Obviously, you allow for transactions that are much quicker than a lot of other ways of transacting, and really just you can put your money in something that actually can appreciate over time because it's deflationary rather than inflationary. Are there any other real positives that you see to Bitcoin when it comes to what some of its upside is?
Yeah, so I mean, I think you hit on most of it, and the biggest thing I think that you can sort of point to is the fact that fiat is really centralized, and when you have a centralized thing, you have various choke points that the government can sort of utilize to control whatever it is that you're trying to not let them control. So, for example, you as a poker player, I'm sure you went through, I think it was like Black Monday or something like that.
Black Friday.
Yeah, and the way that the government sort of controlled all of these exchanges or all of these poker sites was they shut off the financial arm, right? Like as a bank, you're not allowed to let people transfer money into these poker sites. And this is exactly how you got into it, is because they seized your money, more or less. And that's something that governments often do. And the fact that they can't necessarily seize Bitcoin is its greatest strength. It's unseizable. It's your own bank. You don't have a third party that you're sort of relying on, and that means that you have control over your own wealth, which most people don't realize. Like if you hold it at a bank, you're really only giving a loan to the bank, and they'll only give you back your money if the government thinks that you're doing it legitimately, right? Like if they suspect in any way, shape, or form that you are involved in terrorism or drugs or anything like that, they will just seize your money, and you don't really have much recourse. And this is the biggest thing, is that it's unseizable, it's durable. It's not like gold that might be like that sort of wears away slowly, but it still sort of wears away. It's not like real estate. It's not like fixed in one place. So it's very portable. And it's even better than gold in that respect, because you can sort of, port it in great distances without, requiring much money. It's kind of crazy, but up until like 30 years ago, people were still mailing each other gold, and after like some sort of gold settlement. And it would take like 5 or 6 days for gold to arrive from someplace. So, these are all good things. The thing for me that I think it all points to is that it's a really good store of value. And you hinted at this, you kind of stumbled into it. But that's the main value proposition, is that because of the math behind Bitcoin, there can never be more than 21 million Bitcoins. And that means that there's a fixed supply. And scarcity is one of those things that a lot of people don't think that much about. But pretty much everything in the world can be created with more human effort. With Bitcoin, that's not the case, which is kind of astounding, given that pretty much everything else can increase just with more human effort. So as a result of that, you have a fungible, durable, portable way to transfer value that ends up becoming this amazing store of value that you can sort of keep around. And that's kind of the role that gold had about 100 years ago. It doesn't anymore, obviously. But yeah, that's why it's great.
Yeah, I would agree on all those points. But one thing I really like to do on my channel, I like to try and be unbiased and bring up negative aspects. I'm sure you don't talk too much about the downsides to Bitcoin, but let's actually talk about a couple that I think are most interesting. So let's talk about Bitcoin's kind of, I don't know what you would call it, transition, I guess, from being more of a peer-to-peer cash over to more of a store of value. And now, with increasing SegWit adoption, and obviously as Lightning Network becomes more prevalent, we're going to see it kind of revert back to being more of a cash peer-to-peer cash system. But specifically when we look at the last few months, 3-4 months, Bitcoin transactions up until lately have been fairly slow and fairly expensive. So it seems like Bitcoin, although it started as more of a currency, it kind of became more of a store of value. So what's your opinion as far as maybe some of the competitors that are better as peer-to-peer cash? And what are your thoughts on that transition from cash over to more of a store of value?
Yeah, I would argue that it was utilized as cash, especially for businesses, right? Like if you're a poker site, you like the fast payment aspect and the fact that you can transfer it really quickly. But I think the reason why most people got into Bitcoin wasn't necessarily because you can transfer value. I mean, there certainly were people like you that were, looking to take cash out of one side and take money out of one side and put it into another. And there were certainly people that were on the dark web that wanted to, order certain drugs or whatever. And those people definitely used it for medium of exchange. But the main use case, I think, for even back then, even in like 2011, 2012, 2013, is as a store of value, a speculative investment, whatever it is that you want to call it. People bought it because they thought, okay, there's a fixed supply, there's increasing demand. The laws of economics work there, which means that price will go up. And I think that's why they used it. That said, I hear you on the fees and that being very high right now, or at least up until recently. And that's certainly something that a lot of people, especially businesses, are very concerned about. And this makes sense because if you are a business, you want more transactions because that's how you make money. And it's kind of funny because the New York agreement, which was agreed to like last May, was signed by businesses, right? And they wanted more capacity, and that's kind of why they signed it, is because they thought, okay, well, I'm gonna get more business this way, and it's a lot easier for me than implementing something like Lightning channels or transaction batching or any of these other solutions that would come up. So yeah, I mean, there are negative aspects. I mean, I would say that medium of exchange sort of use cases are there. I would say privacy and sort of fungibility concerns are probably more interesting to me because Bitcoin doesn't really have that right now, especially given the drastic AML KYC laws that pretty much every exchange implements.
Well, yeah, if you're going to take U.S. customers, they're getting more and more strict by the day, especially after the hearing from the Senate last week, which maybe not the best news for some upcoming ICOs and stuff. But let's talk about that a little bit later. So just to ask one more question on that point, there might be some people that when they look at Satoshi's original vision, and you can already kind of hear who I'm talking about, but we'll get into who that is more later. When you look at Satoshi's original vision, he said peer-to-peer, cash system. He was talking more about a currency than a store of value. So do you think that it's important for Bitcoin to follow more in line with what the founder of Bitcoin saw, or do you think it's more important for us to be realistic and use it as what it's becoming?
Well, so the white paper's title was peer-to-peer electronic cash. That's true. But as far as I'm concerned, if you read the whole white paper, it was about utilizing, having an electronic money. And money has three sort of components to it. Medium of exchange, which is what peer-to-peer electronic cash is talking about. Store of value and unit of account. Unit of account, isn't really that relevant because we price very few things in Bitcoin today, other than maybe like altcoins and like Casacious coins or something like that. But store of value is the killer app, because when you have, and that sort of drives out the medium of exchange use case as well. Because when you have an asset that's going up in value, people don't want to spend it, right? They'd rather spend US dollars. I don't want to spend Bitcoin. I still remember in 2013, I bought like, $100 worth of beef jerky. And, that was delicious beef jerky, but that's now like 0.25 Bitcoins. And that's, like $2,000 beef jerky. It was good, but it wasn't that good, And a lot of people have gone through that, right? People bought cars for like a couple hundred Bitcoin. That's like a few $1,000,000, right? It's kind of crazy, but that's kind of how money tends to evolve, and it will be peer-to-peer electronic cash. We just need to be a little more patient.
Yeah, I would say from my own personal experience, running an online business, I have a poker training site called Upswing Poker. We added in Bitcoin, popular demand. The people wanted it, Jimmy. They're like, give us Bitcoin so that we can pay for this using Bitcoin. And we're like, all right, there's just overwhelming demand. Like the people want it, let's do it. We implement it, and we're like, all right, here come the sales. Didn't come.
Every business has gone through exactly what you have, like Expedia, Dell, Overstock. Like they get it like sort of an initial burst, and then like no one pays for it ever again. It's just, it's kind of, and there's a reason for that. It's called Gresham's law, right? Bad money is spent in preference to good money, because you want to hold the good money, the money that's like increasing in value, and because it's a good store of value, the medium of exchange case isn't utilized as much.
And that has to be a drawback in some capacity, right? That, I think of like one of the reasons why, we had the price crash or whatever you want to call it recently. And one thing that I felt like made me feel safe about the whole thing, and maybe I'm just a poker player, so I'm used to swings, and I was just like, whatevs, man. Like I've never lost more money than that, but I've lost a lot of money before. But I just felt like, there are people that have to use Bitcoin. There just are people, like if you live in a country where you can't trust your government, to not print tons of money and cause inflation, you have to use Bitcoin. You have to use it. So there are certainly going to be use cases where people have to use these things, which, at least provide some base level of support just from like a fundamental level of people have to be able to use them. So in my mind, the more that Bitcoin's infrastructure includes medium of exchange, the more its baseline of support and the more maybe its adoption can increase. Do you think that maybe it could be a drawback for Bitcoin that people aren't using their Bitcoin to purchase things with businesses?
Yeah, I mean, it's a tough question, because it's any sort of economic activity is a dynamic system, and you don't know how one affects the other. I'm sure you're well aware as a poker player, like one person can affect another person, and you have to sort of watch that interaction in order to figure out what's going to happen. And we don't know all of the variables. I will say though that in those poor countries where the government sort of seizes your stuff or whatever, you're really using it more as a store of value, right? Like if you are in Venezuela, you hold Bitcoin because the bolivar is worth nothing, and you only spend when you absolutely have to, and hold preferably in larger chunks. I think there will be services that sort of allow that, where you can sort of hold it somewhere and sort of spend it in smaller chunks, and that sort of use case can be handled. But all that said, the situation where fees tend to be high or whatever, it's a temporary thing. I think there will be sort of market solutions, especially Lightning, sidechains, like even batching or like semi-bank-like services where they'll pay on your behalf using sort of some off-chain solution or something like that. Those will all come into play, and whenever there is sort of a lot of demand for something and the cost is high, this is when, disruption and entrepreneurship comes in and sort of saves the day. And it's a win for everybody. It's a win for that business that's like providing a solution. It's a win for the customers that are saving money. It's a win for the entire ecosystem because it's getting more utilized. So I look forward to that. I don't know exactly what shape that's going to take and exactly what sort of companies will come out of it, but I have faith in the markets.
Fair points. Let's address one last con, and then let's move into some more positive stuff here. But this is maybe the number one thing that I hear. I assume for you too, but I mean, you tell me otherwise. I hear people say, "Okay, but why is it worth $9,000? Why is it worth anything? Why is it not going down to zero? Bitcoin doesn't make any revenue. It's not like a stock where there's revenue and a PE ratio. Why is Bitcoin worth anything? And why will Bitcoin not become the next tulip bulbs?" I swear to God, the next person that says tulip bulbs to me, I just don't know if I can take it anymore.
Yeah. If you've been in Bitcoin at any length of time, tulip comes up like every month or something, or like to everyone that you talk to, and they think they're being so original by like mentioning tulips or something, and like, okay, we've heard this before. Come on, man. So yeah, it's the thing about store of value and sort of utility, or why this is something that economists have debated for years. But think of it this way. Think about like sort of primitive man, like maybe like 6,000 years ago when they started using gold as sort of a store of value and money. Think about what they were asked to do, right? Like, it's like, okay, you want me to take this shiny yellow metal that has a low melting point that isn't really good for anything. I can't make weapons out of it. It's too malleable. It has a too low a melting point. Like, I can shape it, but it's not going to be that durable for that particular purpose. You want me to take this as money? What? Why? And that's kind of where people are with Bitcoin when they're asking that question and saying, okay, well, why is it worth $9,000, right? Like, why is it worth anything? That's just the nature of a common store of value and money or whatever. Like the American Indians, they used wampums, right? Like these were like sort of like kind of like shells that were fished out of like the northeastern states or whatever. But the entire continent of the United States used wampums as sort of money, and they weren't really useful for anything, right? Like they didn't use them to like build houses or like jewelry or anything. It was just that's what they used, and this is what money ends up becoming in any society. And that's a good thing. You need a store of value. You need some common medium of exchange. You need a unit of account. Any society that doesn't have money tends to collapse pretty quickly because trade is very, very difficult without money. And we're kind of getting deep into the weeds of economics here. But if you don't believe that store of value is valuable for society, go live in Zimbabwe or Venezuela, and you will know instantly why having a good store of value or medium of exchange is very useful. Because, like the entire economy or the supply chain or all of the trading that goes on behind the scenes, they all collapse as soon as you don't have a good store of value or medium of exchange or unit of account. So in many ways, that's what Bitcoin represents, and that's why it's valuable. I mean, like, you can say the same thing about the dollar pretty much, except it's worth much less.
Harder to send places too in general.
Yeah. And it's more easily like sort of inflated away from you. So yeah, that's the reality.
Yeah, I saw someone post a graph or a meme or whatever where it was like it showed like the dollar bill's value by inflation, and like it just showed like -2% or 4% every single year, and said just like USD, what a shit coin or something like that. And I just too funny. Let's talk about fiat though, because I think for a lot of people, when we think of money, we think of fiat currency. At least when I say we, I guess I mean society, obviously not the people in cryptocurrency, but people in general think of money as fiat. And I think that jump into just, you have to trust in the system that, it'll be valuable because people say it's valuable and because it does provide, all of these services to the people that are able to use it. for people that look at fiat and think it has value, it's kind of funny to me because the US dollars are not gold backed anymore. That's like a really common misconception that people still seem to think. Like the gold standard went away a long time ago. It's basically backed by the full faith and credit of the US government. So essentially, like the government is just saying it's a dollar because we say it's a dollar, right? So it's actually not all that different from Bitcoin in that way.
Yeah, well, I mean, it's different in the sense that it's centrally controlled. So every time they have a debate,
I meant in its value, not
like sort of like except with Bitcoin, it's the market that says it's 9,000. With the dollar, it's the U.S. government that says it's worth $1. And everything sort of like prices itself around it. And the thing about inflation is that the inflation statistics that we're told are completely and utterly manipulated. If you look at like the price of like any consumer good from 10 years ago, you'll see that it's like half, like 60%, or like it's gone up 60-70%. So if you do the math and figure out what the actual inflation rate was, it's like it's a lot more than 2 to 3%. It's more like 6, 7, 8, 9, 10%. We don't really know because it's hard to know aggregate statistics on an economy. But yeah, the government controls things. And every time, the Congress is debating like raising the debt ceiling or whatever, that's just a nice way of saying we're going to print some more money, right? Like that's all it is. We are authorizing the Fed to print more money because, it's not really about some debt level or something abstract like that. It's them printing money. And every time they print money, they are taking the purchasing power of your dollar away. It's a way for them to tax you, and this is something that every government has realized, and it's something that's why they deficit spend, right? Because they can spend now and basically pay back later when it's inflated much more. So it's a scam, man. It's all a scam. And it's kind of sad that people are just waking up to this, but at least, I mean, Ron Paul knew this like 40 years ago and he was talking about it. But it's too bad. But I'm glad people are starting to wake up to this fact because it's stolen a lot of wealth and things away from people, man.
Well, let's just play devil's advocate here for a little bit, as I like to do. So for starters, you could say that one of the definite upsides to the US dollar, especially compared to something like Bitcoin, is stability in the price. We see massive fluctuations for Bitcoin. And I think that as a long-term investment, that certainly is fine and makes sense. But as for people that are a little bit older, I would never recommend somebody in their 60s to just like go all in on Bitcoin. It makes no sense to do that. There's no point in taking on that level of risk and volatility. So, I would say that like, as long as you have your US dollars invested in things, I think it's fine to have a good portion of your portfolio invested in US dollars. But not just like chilling in the bank, like Floyd Mayweather style. I've got like, however many millions in my bank. So I guess I would say that. And then also just to talk about, the true inflation level. I feel like that's maybe a little misleading the way that you worded it, because if you look at a consumer level for like base items, like we've seen very little price increase for things like food, some base level needs. We've seen more rises, I would say, in different like luxury type markets or more high end type markets. And I guess I at least view that somewhat as because of an increase in just like, the global economy. We've seen, everyone has just been crushing for quite some time now. And I do think that those markets will reflect that increase in wealth. But, when you say 60-70% increase in cost over the last, I forget what you said, 10 years or so, what are you referencing more specifically?
Like, I mean, I'm actually talking about stuff like food, right? Like, how much did it cost to get a burrito off a food stand, right? And like compare it to the price now. It used to be like $5. It's now like $8, right? Like things like that. And if you do grocery shopping, at least I do every week pretty much at Costco. You've seen the price of things just go up, right? Like fish, for example. It used to be like $15 a pound. Now it's like closer to 30. You'll see even like stuff like milk. It used to be like $1.60. Now it's like $2.89, right? Like little things like that. And that's happening all over the economy. I don't know. Maybe it's different where you live, and certainly your mileage will vary. But and obviously, if you're living somewhere a little more prosperous, you're going to get like slightly better ingredients, and maybe prices increase a little faster. But that's been my experience, and if you sort of track it that way, I think inflation rate has definitely been a little bit higher.
Interesting. I guess I've not really looked at the price of a lot of groceries, but certainly some food for thought.
There you go.
All right. Let's talk about the adoption of cryptocurrencies with the younger generation. We've seen a bunch of studies now, asking people mainly the ages of 18 through 35-ish or so, but really more of a focus on, I think, 18 to 24 type ages. We've seen that young people like cryptocurrency. They like it. They don't like stocks. They don't like index funds. They don't like that stuff nearly as much. It's not exciting to them, but they're very interested in cryptocurrency. And I think that's actually one of the biggest positives about it, is that when you think about what the youngest generation, where they're going, where they're headed, that's just so many years that will define the way that the markets move, because of how they're young. They're going to have their whole lives ahead of them. So I feel like it's a very positive aspect that young people are getting involved in cryptocurrency. And what are your thoughts on that?
Yeah, I think young people definitely get it, right? Like they more or less like if you're like 18 to 24 right now, that means like most of your life, all of your life has been on the internet, right? Like if you're 24, you were born in like 94 or something like that, when like the web was really starting. All of your life, you've had some sort of browser. You've maybe played a lot of video games and things like that. So you're very comfortable with the digital realm. And on top of that, you've probably played a lot of video games and things like that, where you have sort of this idea of digital scarcity, right? Like you only have this is a unique item in World of Warcraft, or whatever. Like you get it. You get that a digital item can be worth something. For a lot of older people, that's a very, very hard hurdle to overcome. Is that, oh, it's somewhere out in the ether, and I'm supposed to value it for some reason. And if you're 50 or 60, it just sounds crazy. But if you're like 20 years old and you hear something like that, you're like, yeah, I get that. Yeah, I sold my World of Warcraft sword for $200 the other day. Of course, like that makes sense. And it's an easier transition mentally for them. So I mean, that's my guess as to why they're so comfortable with it and that they like it, is because they know the value of these things that they've already sort of interacted with. Even stupid games, right? Like if you've played like Magic the Gathering or something like that, that this particular card is worth a lot of money because it's very rare, right? They purposely print a specific number. And so that's kind of liquid or whatever. They get it. And for an older person, they don't. So it is advantageous to be young in that sense. So hopefully more of them like learn, and there is this sort of massive wealth transfer, because as far as I'm concerned, and at least in the United States and other places, all of the wealth is in old people, which is historically kind of rare, right? Like most throughout history, it was more or less in like the 40 to 50s range. Now it's like, all the really rich people are like 70 or 80. It's kind of crazy that way.
When you talk about Magic the Gathering cards, I actually thought about this the other day, and I realized that like when I was like 8 or 9 years old, or 7 years old, or however old you are when you buy Pokemon cards, I realized that I was just gambling. I was like an 8-year-old kid gambling, and it struck me, and I'm like, damn, that's actually kind of fucked up. Like you're like, I hope I get a Charizard in here for my like however many dollars for a pack of cards.
Yeah, that's kind of, yeah. I mean, I'm a little older than you, so I remember like baseball and football cards. But yeah, all those packs are just sort of like gambling for kids, I think. Yeah, they market it a little different, so that you'll buy it. But I always like buying packs instead of the individual cards, because who knows what might be in that pack, right? Like I might get lucky. Yeah, it kind of explains altcoins a little bit.
Oh, bang, bang. All right. Well, we're going to get into altcoins a little bit later. Obviously, Jimmy, I know you're a huge fan of basically all the altcoins, but let's talk about a couple other things first. So this is something that I was thinking about the other day, and it actually kind of struck me when I was watching The Daily Show. And there's this black guy in the show named Roy Wood Jr. Or no, sorry, it was actually on a different show, but it doesn't really matter the show name. And like he basically said, like Bitcoin is a way that like white people like tried to hide money from black people or something like that. And I laughed because it was funny. And then I started to think about like the landscape of cryptocurrency and the people that are involved. And like, man, it is like 95% white or Asian men. It is absolutely dominated by white and Asian men. And so that actually kind of, concerns me a little bit in terms of like the way that money, kind of has always been held and the way that it's moving in the future. Do you think that maybe Bitcoin creates a bigger gap for the less intelligent, for certain, groups of people that might be more, not that I'm saying that people are less intelligent, but you know what I'm saying? Do you think that it creates a certain gap in wealth between, basically white and Asian men and maybe some other different ethnic groups?
Yeah, I mean, if you look at the tech industry, you're gonna see pretty much the same spread, right? Like I've been a developer for 20 years. I can't remember I could count the number of female or non-Asian, non-white male colleagues like on maybe two hands, but not. I mean, it's not that many, and that's just been what has attracted that particular industry. I don't know why, but that's just been the way it is. And it's not a surprise that those are the people that are in Bitcoin because they're the ones most well positioned to, take advantage of it because they knew about it sooner or whatever. Like, how do you bring more people in? I think capitalism, right? Like, if it doesn't matter. Like Bitcoin doesn't care if you're black or blue or cisgendered or whatever. Like it doesn't matter. Like it only cares that you're holding it. Like it's not sort of like biased on its own. If you feel like it's something that's like particular to a particular race or gender or whatever, you can change that. You just go buy it, right? Like you can have whatever influence you want. And in fact, there's probably a lot of opportunity for you if you know how to market to other segments. If you know how to market to women, and you can get them to buy Bitcoin, you can probably like make a lot of money if you can do that for African Americans or like people in Africa or Asia or wherever, whoever is not utilizing Bitcoin, if you can get them to buy it and hold it and understand it, there's a market for you. So in a way, I'm encouraged because the market will fix a lot of this stuff. Whether or not you get in or haven't gotten in or whatever, it's still early, right? It's feels like the internet in like 93, 94. Do you remember like when people were saying like information superhighway and words like that, like which people threw around a lot in 93, 94 because Al Gore was talking about it that way, but like nobody talks about it that way ever since, right? Nobody says cyberspace or information superhighway anymore. Like it doesn't make any sense. Like that's kind of where Bitcoin is now, right? Like everyone wants to talk about it, but not that many people are in it. If you want to be that entrepreneur, if you want to make lots of money, if you want to be in on this, then get into it now. Like it's still very early. People clearly don't know what they're talking about. Still remember like there was like a black actor that goes on like Conan like in 95 or something like that. He's like, yeah, black people don't go on the internet, right? Like it's like okay, well maybe you haven't, but I'm sure that other people have. And he felt like it was like like a wealth thing or a white person thing or whatever. And that's I mean, it's gonna look that way just because that's who adopted it first. But I mean, do we talk about the internet as a white thing now? Probably not. Like almost everyone's on the internet, and I think that's the way it's gonna be with Bitcoin.
Yeah, I actually want to just clarify really quick because I had a lot of things I was thinking, and I think I worded that incorrectly. I wanted to say that I think that in the white men and white Asian communities, Bitcoin is more talked about and more prevalent and more promoted and researched. And then separately, people that are poor or less intelligent or not able to afford getting into cryptocurrency are suffering as well. So just want to quickly clarify that. I know it's the internet and people are going to freak out anyway. All right, let's move on. Let's talk about the next thing here that I think is like a pretty important topic. Let's talk about centralization with the mining in Bitcoin. Now, this is actually something that I thought when I first saw it looked really bad. When you look at the mining pools when it comes to actually mining Bitcoin, I think like 5 of the mining pools account for something around 70 or 75% of the total mining. I'm sure you know the data better than me, but that was what I saw roughly. So when I first saw that, I thought this is really bad. It's extremely centralized, but I didn't realize that the mining pools are actually consist of many different people that are part of that pool. So can you talk to me about, Bitcoin on the mining side? How centralized is it really? Should we be worried about the dominance certain pools have within the total mining pool? And just maybe talk a little bit about Bitcoin mining in general.
Yeah. So there's a lot of mining pools, like you said. I think it's a lot more diverse than, say, it was 5 years ago. I think around 4 years ago, there was one pool that had like over 50%. That it's like ghash.io or something. They've since gone away completely. Like nobody uses them anymore. But yeah, you are right, like in the sense that individual miners sort of sign up for these pools or whatever. And one of the things about mining is that you can't really know information for sure. You know that, what they're signaling, but they can easily lie. And each pool can have it could be one giant miner or it could be like 100 tiny miners. You don't really know. So centralization is sort of like one of those things where you don't really know the data and people are afraid of it. So let's talk about why people might be afraid of it. The main thing that a miner can do is they can sort of censor transactions, right? Like if they don't like a particular person or an address or something like that, they can refuse to mine a transaction that contains it, even with a large fee. But the way the economics is set up, if you include a sufficient fee, it's in the miner's best interest to go and mine that transaction so they get the fee. And economics tends to work out, and it's hard oftentimes for a miner to be able to tell where a transaction comes from anyway. And most of them are just in it for the money, right? Like they run these giant mining operations and spend tons of money on like actual mining equipment and electricity and staff and all of these things, because they're in it to make money. And the worst thing that they can do is maybe double spend once, and that's with somebody that isn't checking more than like one confirmation or something like that. So the fears of miner centralization, I think, are overblown. And if you take out like ASICs and GPUs and things like that, what you end up with are botnets, right? Do you really want a Russian hacker to like be able to control like a particular coin? I certainly wouldn't. So at least as far as I'm concerned, the concern's a little overblown, and the economic incentives are aligned in such a way that it's best for the entire ecosystem. It's fine. Would I like more pools? Would I like more geographic and jurisdictional diversity? Yes, because that sort of decentralizes the risk a little bit. But that's sort of happening anyway. Bitmain has like operations like all over the world. So does Bitfury and others, because they know that that's a risk, right? Like China might shut down mining tomorrow. So, they have like something in Iceland, something in Quebec, something in Mongolia, something, that's the responsible way to run a business. And I think that's fine.
Right. But, one of the things is as you scale, you're able to buy things in bigger bulk and get better deals. And really, at the end of the day, places with extremely low price of electricity, they're going to be able to mine at a more profitable rate than places that don't. So does it at all worry you that certain players can become too powerful? And then also, this is something that I'm actually just interested in. So I'm not entirely familiar with the way that, when there are updates to Bitcoin as far as, signaling and what actually passes. Could you maybe explain to me how hard forks happen or soft forks happen with Bitcoin, and talk about, the role that the miners play in that?
Yeah, so this was kind of a point of confusion, especially with SegWit. But basically, BIP9 is sort of like the upgrading mechanism. And if you look at Bitcoin, you can look at a block header. It's 80 bytes, and the first 4 bytes are the version. And for a long time, up until BIP9, what you would have is every time there was a soft fork, they would just sort of increment that version. So it was version 1 at the beginning. I think with BIP 16, it went to version 2. With like BIP 66, it went to version 3, something like that. So it used to increment. The sucky thing about that is that you can only really have one soft fork at a time because you're incrementing the version. So what they did was they implemented BIP9, which said, okay, there's 32 bits that we can use, and miners can signal readiness for a particular soft fork by flipping a bit. And that can be independent of the other bits. So you can have like up to 29 features that are sort of being signaled with readiness at any one time. And that's what the idea of BIP9 was. The critical part of BIP9 that I think may have been a mistake was saying, okay, we're going to wait until 95% of miners are ready, then we're going to sort of let the soft fork code go in. And that's what caused the contention in SegWit, is that that percentage didn't go above like 35% for a long time. And like in May, you know, they had like the New York agreement and everything. And, you know, they said, okay, well, 95 is obviously too high. Let's bring it down to 80 and so on and so forth. But it was meant to be sort of like a mechanism to make sure that none of the miners got screwed. But they used it more as, hey, we get to vote on this, and it's our right to reject it. When in fact, it's a soft fork. So, you know, they like, if they don't want to mine it, they can just not mine it, but it's going to be in their interest because they're going to get more fees out of it and so on.
Right.
So
but they can't really, sorry, not to cut you off, but they can't really not mine the main chain, right? So they are extremely incentivized for it to follow what they are interested in.
Yeah. So they could mine other transactions besides the SegWit transactions, and they could have done that at any time. So that was kind of the thing behind BIP9, which a lot of core developers don't think is going to be used again because it gets too politicized that way. There's something called BIP8, which instead of like BIP9, which by default sort of like shuts down the soft fork feature, it by default sort of allows that feature to go forward. If like enough miners don't signal for it by a certain date, then it just goes through anyway. But the whole sort of like game theory of a soft fork is such that if you are a miner and you don't follow that soft fork, if you're not sort of validating the extra stuff that you need to validate as part of a soft fork, it's a tightening rule, so you have to validate more stuff. Then you're eventually going to fork off, and then like your blocks are going to get orphaned. So it's in your interest, like you don't want to mine a block and then find out that it's invalid later, right? Like that's the fear that a miner has. So it's in their interest to sort of upgrade and make sure that they get their reward. And that's more or less the movement behind user activated soft fork, was that the users activated it and you had even a few miners that were on it, then they would eventually become the majority. And, these other miners will, switch, and then, it would become part of the network. So that was the idea behind it. And we're not really sure how future soft forks will work, maybe BIP8, but it's up to the people that are writing a lot of these features to determine, okay, like we want to try to activate it this way, or we're just going to do flag day activation. There's a lot of different ways to do it.
Yeah. So like for me, I find it fascinating because it's definitely the thing I know the least about. And so I'm just trying to understand it better. What percentage of miners have to signal? Because whenever there's a proposed change, miners signal, correct? They signal whether they're for or against the change. Is that correct?
It's more like we're ready or not for the change, because it doesn't really make sense to be against it, or it's not really against per se. Like if you don't want to mine SegWit transactions, you don't have to. You can make a block without any SegWit transactions whatsoever, and probably fill a whole block with them. And you can do it, and that way you don't have to validate any SegWit transactions, and you'll still get your reward and everything else. But if you do mine SegWit transactions, you'll probably make more money. So it's sort of an economic incentive way. And if it's a soft fork, you have no obligation to upgrade, but it's probably in your economic best interest to do so. Does that make sense?
Sort of. So who decides when these developments are going to be added in?
It's up to the developers that are making it. Again, like miners don't have to mine any SegWit transactions, and they never were, but they included sort of economic incentives to do so, and that's how it got adopted. And obviously, it was tested and all this other stuff. And anyone can soft fork at any time, right? Like if you wanted to make a feature on your own fork of the software and try to do it, it might work, but you need like at least like a majority to follow you in order for the extra rules to be validated. But you don't have to as a miner. And if it's like 99-1, then probably that soft fork isn't going to go through that, or is going to really be a part of Bitcoin. And it's a market thing.
So I know you had a proposed change for Bitcoin. You wanted to, I think, change the unit of measurement, correct? So can you walk me from your idea to if it actually finally goes through, what has to happen in that process for it to become implemented?
Are you talking about BIP 176?
I was talking about how you want to change the
Bitcoin to bits.
Right, correct.
Yeah. So that one's something called an informational BIP. BIP stands for Bitcoin Improvement Proposal, and an informational BIP is just sort of like, you don't have to follow this. This is just what we think might be a good idea, and if you want to utilize it, great. If you don't, great. But basically, the idea is to sort of combat unit bias and like making mistakes by orders of 10 or whatever. You utilize something called bits. 1 million bits equals 1 Bitcoin. And that way you don't make a mistake and pay like $100 when you really meant 10, something like that. And that was just, it's already been around. I only wrote it up because some CEOs of various companies were asking me to, and I had proposed it before, and they were like, "What, can you finish this?" I was like, "Okay, well, let's see what happens." But that's an informational BIP, so it's not like any code. It's sort of like, hey, here's a way to do it. For sort of standards track BIPs, these are things that would go into the consensus part of the code. You would have to write up the Bitcoin improvement proposal, all with examples and specifications on exactly how that would be done. It would have to get reviewed. Once it's approved, then you would have to submit some code. Once that's reviewed, then you'd have to fix whatever they said. And then if there's consensus on it, then it gets merged in. And at that point, it can become a part of Bitcoin. But again, miners are free to reject it, right? Like, and everyone that runs a node, you're master of your own node. You don't have to run that software. You can if you want to, but that's the idea. It's a decentralized network, so that means no one's in charge. Right. And then this is why things are done as soft forks.
Okay, let's move on. Let's talk about Lightning. Because I've heard a lot about Lightning over the last few months. Obviously, we saw the first Lightning nodes, I think early January, maybe late December, if that's correct. Then I saw an update that there were over 1,000 Lightning nodes running now. Can you talk a little bit about what Lightning is, some pros and maybe some cons as well?
Yeah, sure. So if you think about sort of a Bitcoin transaction as like a check, right? Like I'm giving you $20 or something like that. And more or less $20 gets debited from my account and $20 gets credited to your account. Imagine if we do a lot of business, right? Like you and I, maybe we're playing poker, right? Like, and money keeps going back and forth, right?
That would be business.
So say there's like 100 transactions, right? Like $20 goes to you, $10 comes to me, $50 goes to you, $40 comes to me, and you could put all of those on chain, but that would be a lot of transactions and a lot of transaction fees. Instead, what we can do is net it out, right? Like, all right, so we did like 100 transactions, but at the end of 100 transactions, it really is just $5.43 from me to you, something like that. That sort of like netting and putting only that into the blockchain, that's the core idea behind it. And that's called a payment channel. So we continuously update this payment channel. where I have some money in it and you have some money in it, and we pay each other back and forth until there's some final state, at which point that goes into the chain. But no one has to know about any of the in-between states. And so in that way, it preserves privacy. And the payment channel is sort of the atomic unit of the entire Lightning Network. So you might have one payment channel between me and you, and then we might have another payment channel between you and somebody else. And I can pay that somebody else through you without having a direct channel open with that other person. And and you can do this trustlessly. You can do this, without you needing to know where it's going or anything like that.
Actually, really quick, what about the double spend problem? Does that become an issue here when we start to have these off-chain transactions?
No, not for Lightning Network, because you have to because each channel is sort of funded on its own. So if I have a channel with you and you have a channel with Alice, then the channel you have with Alice is totally provably right. The channel I have with you is totally provably right. So if I can't spend money to you and to somebody else because the funds are locked in that channel between you and me.
Okay, gotcha.
Yeah. So utilizing that, we can imagine like it can go through like many different hops and not just like one or two. And that's the idea, is that you have an entire network of payment channels, and that's what's called the Lightning Network. I can pay anyone on the network as long as they're connected and there are enough funds sort of along a particular path. And we can do it, and we can sort of net out as a whole network, right? You don't have to net out like every day or whatever. Ideally, what you do is everyone opens a channel, and then we just do business on that channel, and no one has to know exactly what happened. It's one of the weaknesses of Bitcoin, by the way, is that every transaction gets recorded on Bitcoin forever. So, people know about like, given sufficient sort of metadata around the particular transaction, they might know that you bought nipple rings like in 2013, right? Like that would be kind of embarrassing. But with something like Lightning Network, you might buy lots of different things from Costco. I don't know if they sell nipple rings, but you might buy lots of things from Costco.
Sure you don't, Jimmy. I'm not buying it.
So you might buy a lot of things from Costco, and maybe they're refunding you some money based on like whatever you return or whatever. So it's possible that nobody else has to know, right? It's just between you and Costco, and the net transaction is the only thing that gets settled on chain. You just know that you spent maybe like $200 at Costco. They have no idea for what, or like unless they're keeping really good records and can prove it. It's privacy preserving in that way.
Do you think that Lightning is going to end up solving a lot of the issues that Bitcoin has as far as transaction speed and cost? And there are, at least some people that don't like going with off-chain solutions. Do you think that there's any merit in terms of the safety of those transactions, the security of those transactions, or do you think that this is just really only got upside? Like, what are your thoughts on that front?
Yeah, so there's definitely a lot of upside because Lightning transactions are more or less instant. It really is the speed of information. Like if I wanted to send some money via the Lightning Network, it can get confirmed really fast because it's just the middle hops that need to sign a few things, and then it comes back. It's kind of like a web page load. However long that takes, that's how long a Lightning transaction can take. But are there downsides? Absolutely. We don't know the security properties of Lightning that well yet. It hasn't been around. So one of the reasons why Bitcoin's so trusted more or less by a large part of the community is that it's been around for 9 years, and all sorts of attacks have gone against it. People have tried all sorts of things to break it. We haven't had that with Lightning. And this is, one of the reasons why I'm very skeptical of a lot of altcoins, because they haven't had that much usage. And, a lot of them are like, a few months old or whatever. You don't know the security properties of something that's a few months old that hasn't been used yet, that people haven't, tried hacking. Like, put some Russian hackers against it. Then you can find out the real security properties. And this is one of the things that we honestly need to do with the Lightning Network. And one of the weaknesses, honestly, is that you have to keep your private key online. With most other, Bitcoin transactions, you can completely keep it offline until you're ready to do a transaction. Then you can do it. With Lightning, if you're sort of like a middle node or node that's sort of helping facilitate transactions, you might get paid, but you also need to keep that transaction online. So, that ends up, having a different attack surface and different security properties that you have to think about. So there may very well be some fatal flaw that somebody finds at some point. No one's really found it yet. But this is why I like Bitcoin, is because it's a market and there are other solutions that are trying and competing against it. So I believe in markets. I think somebody will come up with something at some point that's off-chain and really scalable.
Yeah, it sounds like we have a lot of smart people working to try and create some innovative solutions to the problem. Let's just quickly talk about a couple things. So, I hear people talk about Blockstream all the time, especially from like the Bitcoin Cash guys. In fact, I actually got accused in a recent video I did, and then a talk on our BTC, of being a Blockstream shill. And so in the effort of wanting to understand who I was shilling, what exactly is Blockstream?
It's a company started by Adam Back and a few others, but their original vision, I think, was to figure out how to do side chains and a two-way peg. And if you don't know what side chains is, it's basically like, if you think of a pegged currency. So, for example, certain currencies in Asia are pegged to the dollar. So, the central bank of that country tries to keep that currency in a certain range. What you have with a sidechain is something called a two-way peg, which means that it's always a 1-to-1 or 1-to-10 or whatever the ratio is. It stays constant. It doesn't float or fluctuate at all. So that means that it acts more or less like an extension of the main chain, in our case, Bitcoin. And that's what Blockstream was sort of founded on. Adam Back had this idea on our IRC, I think, in 2013, 2014, and he went out and got some funding for it. He recruited a bunch of core developers, some of which are still there. Many of them have left. So Matt Corallo, Greg Maxwell, Peter Wola, and Luke Dash Jr., I think, all expressed interest, and they were at various points part of Blockstream. But Matt Corral is now with Chaincode Labs. Luke Dash Jr. is no longer working with them. Greg Maxwell is no longer working with them. I think Peter Wola is still there. But it's a company that's like any other entrepreneurial company in this space. They're trying to innovate and make something new that people find valuable. So they have several products, including the Blockstream satellite. You can set up a satellite. I still have mine back there that Samson gave me. But I haven't been able to set it up because I'm just not that good with hardware. But that it allows you to get the entire Bitcoin blockchain from a satellite, which is great. You don't have to be connected to the internet in order to receive the Bitcoin blockchain, which is something that people always thought about. Is, hey, what if the internet goes down? Then you're screwed. Not exactly. You can still do it.
I don't think I've ever heard anyone complain about that once.
Oh, really?
And I've had many people yell many things at me as far as the problems with the crypto and Bitcoin and everything.
Really? I've heard this several times.
What is it? Was it Y2K?
Well, what if the world goes down and you don't have electricity? Then doesn't this money disappear? You've never heard that?
I mean, man, if the world goes down and electricity is gone and there's no internet, I'm not even sure Bitcoin's high on my my concerns list.
I agree. But yeah, so they have Blockstream satellites. They have some other products. I think they have Liquid, which is like a side chain that's based on elements. They have some research projects. Yeah, they have a bunch of things, including Lightning and side chains. They're sort of like, if you think of AT&T Bell Labs from many years ago, they're kind of doing that for crypto, and that's what they are. The reason why the RBTC folks are so up in arms about them is that they're perceived to be sort of the people that have prevented the block size increase that the RBTC people have really wanted. And that might or might not be true. Whether or not they're valid in that, and blaming it on Blockstream, I think is kind of dumb. But I don't know. That's just sort of my perception.
If the company's goal is to have side chains that operate, then that almost by definition is going to, I mean, not fall in line with solutions like block size increase, correct?
Yeah, I mean, the thing about a block size increase, at least as a hard fork, I think as a soft fork, maybe there's at least a sliver of room that it might work. And you can do it with like extension blocks or something like that. And that may eventually come to pass. But doing it as a hard fork is nearly impossible in a decentralized cryptocurrency like Bitcoin. And I would argue that it's pretty much the only one that's really that decentralized enough to be able to say that. You can't do a hard fork because you need everyone to upgrade. If a single person, or if people don't want to upgrade, they don't have to. And that means that at that point you fork into two coins. And that's more or less what happened with like Bitcoin Cash and Bitcoin Gold and all of these other ones is, you try to upgrade the entire network. If people don't follow you, you end up with multiple coins, and then you get into a fight over what's the real Bitcoin or whatever. So I don't think a block size increase was really tenable, especially given the opposition, and that's turned out to be the case, right? Like otherwise people would have followed Bitcoin Cash or whatever, and only a small part of the network did.
So let's talk about block size increase for those of you guys that might not understand exactly what we're talking about. With the increasing cost of transactions and increasing expense for transactions, basically Bitcoin has to figure out ways to scale better, to make it cheaper and faster to send money, or else it gets kind of clogged up and people can't use it, and then that's obviously bad, because if you can't use your Bitcoins, then why do you have them? So there were essentially two different kind of proposed resolutions. There was increasing the size of each individual block on the chain. I think it's currently at 1 megabyte, and the proposal was to 8 originally, or I forget exactly what the proposal was. I'm sure Jimmy knows better. That was one way of going about it, and then Lightning Network or side chains were another. And I think originally we saw maybe even some potential of both kind of working together with SegWit 2x, where we saw a proposed small block size increase or doubling the blocks, and then also adding in SegWit. But ultimately, Bitcoin went with more of the side chain resolutions, and Bitcoin Cash went with a block size increase that they felt was more in line with the original Satoshi white paper. Would you say that's fair? Anything I said wrong there?
Well, so first of all, SegWit is a block size increase, and that was it was a soft fork block size increase. So you can right now on the Bitcoin network have a block that's like 4 megabytes. No one's done it because it doesn't really make economic sense to, but you can do it. With the other side was more or less 2 megabyte blocks, or I think 8 megabytes on Bitcoin Unlimited. And Bitcoin Cash ended up taking some of that into their code base. But yeah, the two ways I would say are one, which is like the more dangerous sort of hard forking way, which means that everyone has to upgrade. That's the Bitcoin Cash way. That's what they were proposing with SegWit 2x as well, was everyone has to upgrade. Otherwise, you're off the network, which you can't really do in Bitcoin because there are too many people that oppose it, at which point it just forks. And then there was the other way, which was a soft fork, SegWit, which is a block size increase. It's just not realized immediately. So if you look at like, Coindance or something like that, you can see what the size of the blocks are, and it's like 1.1, 1.2 megs. So it's clearly gone behind the 1 megabyte limit that used to be there. But those were the two solutions, and I would characterize one as sort of very lazy, and the other one as like clever and adding a lot of other features at the same time. So SegWit allows you to do like sort of future upgrades in a very smooth way. It also fixes transaction malleability, which you need for the Lightning Network. I can get into the technical details, but I don't know if that's what you want me to do. And it solves the quadratic hashing problem. All of these things that were sort of a part of SegWit. And then there was like sort of the block size increase, which would have fixed none of those, but had the side effect of making it very easy for businesses because they wouldn't have to do anything. With SegWit, they would have had to change all of their addresses and change up their infrastructure. So it would have cost them more. But with a 2 megabyte size increase, they just have to upgrade the software and they're done, right? Like it was much more business friendly. And this is why I think a lot of those companies agreed to the New York agreement, is because they wanted to do the least amount of work possible for the most amount of profit for their businesses. And that's kind of what ended up happening, is that a lot of people that weren't part of those businesses decided, okay, well, why should we agree to the laziest thing? Why wouldn't we want something that's safer and gets you, a lot more features and a lot more upgradability in the future? And that's kind of what SegWit was, and that's what ended up winning, more or less, because the holders in Bitcoin get a say. Whereas in like whenever you look at the U.S. government, whenever government and business get together, they make regulations that are really good for the businesses, because that's what businesses do. So. And that's kind of what they attempted to do with the New York agreement. That's not what won, though.
What are some upsides to block size increase? Because it seems to me like there has to be some good things that happen. I did try to understand kind of more where a lot of the Bitcoin Cash guys were coming from by posting on the forum and asking some questions. And I think that their argument is that just because something is more complex doesn't mean it's necessarily better. Not to say that they're right or whatever, but so what are maybe some advantages to just going with a more straight increase in block size? And then kind of also playing on that, when you talked about the security of the Lightning Network, because it is new, it hasn't been tested, it's going to take a lot to make sure that we get to the point where it's secure and doesn't have any potential weaknesses. Do you think that downside is also another good positive for Bitcoin Cash?
Yeah, so I think the main benefit is obviously transaction throughput. Nobody has to change anything, so you're going to get doubling the block size. That means more transactions can go through. A lot more sort of activity, economic activity can happen. I wrote an article a while back, the SegWit 2x aftermath, the divorce of the crypto Austrians and the crypto Keynesians. And I argued that a block size increase was essentially a Keynesian sort of economic philosophy thing. And if you're not familiar with Keynesian economics, they're very much into the velocity of money, making sure that money moves through the economy very, very fast. And this is sort of the philosophy that when government and businesses get together, that's the philosophy they have. How can we get people to spend a lot of money and move money around? This is why, like, government officials after a disaster, they go spend some money. That's what you can do for your country. It's a ridiculous and stupid thing, in my opinion. But that's kind of what they say. The more Austrian view is that money is a store of value, and wealth comes from savings and not spending. So that's more the tact I think that the SegWit supporters I think were taking. But that said, like what are some benefits? Obviously, transaction capacity increase. That means lower fees per transaction. And that's the main benefit. I would say that there's a lot of downside to that, but the downsides I think that you were talking about with respect to what a lot of the BTC supporters were talking about is sort of the complexity around SegWit, the complexity around Lightning, and the security around both of those things, and those are fair points. The nice thing, though, is that SegWit got implemented on Litecoin first. So we got to see a lot of the security properties and sort of things play out, which is great. We also had like lots of testing on testnet and tons of unit tests and things like that to sort of assure us that this would be okay. And that's kind of what's happening on Lightning right now, is that people are trying it out, figuring out ways in which it's vulnerable or whatever. And this is how technology moves forward. And if you didn't want to use SegWit, that's fine. You didn't have to use it, right? Like, but you still get the benefits of other people using it, because that means that there's more sort of block space available for you. So in many ways, like I understand their concerns, but most of those concerns have been allayed, and I don't think they're that valid anymore.
One sec, let me just ban somebody here that's acting particularly. All right, there we go. Sorry about that. The chat getting a little unruly. Yeah, okay. Everything you said makes a lot of sense to me. I honestly, like, I think I have faith in the Bitcoin development team to, only implement things that are going to be safe, that are going to be secure. I think that, you look at Bitcoin, like it's pretty clearly the safest currency there is out there. It's the most proven. But kind of switching gears a little bit. Let's talk about some altcoins. Let's talk about maybe some other things, some other currencies out there that might have some potential. And you talked about Litecoin. I'm not actually too interested in Litecoin, but I would like to hear your general thoughts on it.
Yeah, so Litecoin was, I think, invented in like 2011 or something like that. And if I remember correctly, what Charlie said he did was he spent 4 hours on it total to create Litecoin. He changed a few parameters, changed the hashing algorithm to from double SHA-256 to something called script or something like that. And there were lots of other sort of altcoins at the time, and most of them had like huge pre-mines or dev tax or something like that, which should sound familiar because they're going on. Those things go on today. But he basically said, I'm going to launch this, and it's going to be completely fair. And that's what made it successful, at least according to Charlie, is that it was a fair launch. It didn't actually have that much innovation. They reduced the block times to 2.5 minutes. They made they made the proof of work algorithm a little different and stuff like that. But it wasn't that different at first. What it's evolved to now is it's sort of like a test bed for Bitcoin, right? Like it got SegWit first, it got Lightning Network transactions first. It's doing like even my BIP for like bits, right? Like Litecoin has like lights and photons or something. I don't know. Like they have all of these names for different denominations, and they're trying it out. So in many ways, I kind of see it as a test ground for Bitcoin, and I think a lot of people see it that way as well. And you can sort of see the price action happen on Litecoin. And that can sometimes be predictive of the price action on Bitcoin, because when Litecoin got SegWit, it went up a lot because people were like, okay, well, if Bitcoin never gets SegWit, then this might be the coin. And similar things with Lightning and other things. So in that way, it's kind of interesting. But as far as the actual code, it's actually not very different than Bitcoin. It's literally 4 hours of Charlie Lee's work in 2012 or something like that.
I think that's the big thing for me why I don't own any Litecoin. It's not because I don't think Litecoin is good or I don't think Litecoin is usable. In fact, like I think it is cool that the Litecoin community seems a little more committed towards just trying to improve Litecoin, whereas I feel like the Bitcoin community kind of infights a lot. But I mean, it's basically just Bitcoin with a couple tweaks, and maybe those tweaks are better. But if something comes a year later and then doesn't really make any significant strides in what they're trying to do, it doesn't really strike me as long-term what will end up, succeeding. Realistically, you either have to be the first mover or you have to come in with some really, I think groundbreaking technology that changes the game. If you're not doing one of the two, what are you really doing? How are you ever really going to scale and become the biggest currency in the space? So I don't really own any Litecoin. I don't really see a ton of upside to it, especially with the fact that they're already listed in all of the big exchanges. We saw the Coinbase boost. Obviously, the price rocketed and everybody was like, oh, yeah, Litecoin. But it's like, okay, well, where is it going to go from here? Bitcoin's going to increase SegWit adoption, and we're going to get Lightning, and we're going to basically do all of these things. and now Litecoin's still there. And I'm not saying Litecoin's bad. I mean, I think Litecoin is totally fine, but it just doesn't really seem innovative enough for me to want to, pick it up as potentially a long-term hold.
Yeah, I think what you said about sort of wanting something that's either first mover or an order of magnitude increase in utility. I think that's kind of what you want out of a cryptocurrency if you're looking at anything besides Bitcoin. It's not the first mover. So it's either Bitcoin or something that's an order of magnitude better. And I don't think Litecoin is an order of magnitude better. That said, it could be useful.
I don't think anyone thinks that it's an order of. I could be wrong. Maybe even the Litecoin fans, like this we're going off rails here, but I want to talk. We're going off chain, Jimmy. We're going to go off chain for a second. All right. So this is something about cryptocurrency that really bothers me. Okay. People just get so tribal, like so goddamn tribal. Like, you don't like Litecoin? Well, fuck you. I hate you. Charlie Lee hates you. We actually talked shit about you yesterday because we knew you didn't like it. It's like, guys, like, you can like multiple currencies. It's like, if you like a currency that someone doesn't like, it doesn't make someone a bad person. It's fine to try and be, open about things. Guess what? Your favorite currency, it's got problems. They all do. They all do. There's no currency that has no goddamn problems. If there was, we would probably just see that one at the top of the list by quite the margin. Everything has issues, especially as they scale. And you have to try and be like open-minded and understand. That's actually why I want to get cool people on the channel that actually know what's going on, so I can ask questions and learn. Like, I'm not an expert, and I'm totally fine admitting that. I do have currencies I like a lot more than others, but I also want to learn what's wrong with the ones I like and what's good about the ones that I don't like, so that I can try and make informed opinions. Don't just jump on the hype train and just like, anytime someone says something negative, you like close your ears out and just like, that's like counterproductive to trying to actually understand what's going on here. And, even if you don't like something, you should definitely listen to what people have to say about it, especially experts and developers and people that have been around a long time, what they have to say about it, and do your best to try and learn. Sorry, I had to go on that time.
No. That's absolutely correct. And the thing about this space is that the loudmouths get the platform. So oftentimes what happens is, if you shout the loudest about how awesome your currency is and just crap on everybody else, that's how you get upvotes on your subreddit or Twitter or whatever. And obviously those bubble up to the top. So that's the perception, is that everyone's like that. When in fact, I think more people are like you, Doug. Like, they don't trust themselves to that degree of certainty. I don't trust myself to that degree of certainty, right? Like, it's like, how can you be that sure of something in the future when, like, it's all new and nobody, like, it's kind of like saying in like 93, 94 with the internet, oh, the internet's going to turn out to be exactly this. And everybody that said something like that is completely wrong, because there's no way the future that clearly. And it's all murky. You just sort of have to guess based on sort of your best effort. And I think that's the way to go. What you're doing is right.
I do think, though, Jimmy, that your view is very different. I'm gonna relate it to poker, right? Because obviously that's the industry I know a lot about. When I started playing poker and I learned a few like things, I was like, man, I'm really good at this. I know like a few things. Like, these are really working out. Like, trying to flop 3 of a kind's a pretty good play. I'm gonna do more of that. And then, like, as I learned more, I realized like how much there was to learn. And even I would say, like, at the absolute pinnacle of my career, where like, I think I knew more than almost anyone about poker, I still knew that there was so much out there for me to learn and know that, you're almost like, the more you learn, the more you realize you need to learn, and the more confused it almost can be sometimes, the more confusing it can be.
Yeah. Knowledge is the great humbler. And the arrogant people are the ones that really don't know anything. And this is something, it's more sort of like a life tip, I guess, is, run away from people that sound that certain about anything, because they probably don't know, and they're really trying to convince themselves more than anybody else.
Yeah, that is correct. I'm not going to say the screen name. That it is Dunning-Kruger is what we're talking about.
Yeah.
Okay, so let's actually move on from Litecoin. Let's talk about altcoins in general, because as someone that has watched the morning brief from time to time, You guys have a certain tone about the way that you like to talk about altcoins that is not like, oh shit, let's jump on some Tron. So what are your thoughts in general on altcoins? Do you hold any altcoins? Are you only Bitcoin? What are your general thoughts?
All right, so you have to understand the history of altcoins, right? Like I said, starting in like 2011 ish, they started popping up, and at least the early ones, there was a lot of like pre-mining involved, a lot of scamming. Through 2013, 2014, a lot of these projects were sort of designed to enrich the creators and not anything about the community. And I would argue many ICOs sort of fall into that same category. It's all about making money for the creators, not contributing anything to the community or putting something useful out there. Like the joke is you have a business idea, bolt a blockchain to it, and then like do an ICO, right? Like that's what people are doing nowadays. So I think for me at least, and maybe I can almost speak for Tone here too, my bias is towards thinking that these are scams. And for good reason, because of the history behind it, because of sort of the motivations of a lot of the people that have come out with it, with these things. That's not to say that every altcoin is scammy, all right? But the bias towards thinking that they're scams is, I think, a sound thing, just given the history of what's happened. That said, there are altcoins that I respect. I respect Monero, Zcash, and Decred a lot because I know they're developers. I know that they didn't spend just 20 minutes tweaking a couple of variables and pretending that they're a completely new thing, like a lot of altcoins and ICOs do, right? It kills me that ICOs have so much value because it is literally a template that you fill out with a few things on Ethereum, and then you have an ICO. Like you don't really need to do much more than that. But like the fact that these three projects, at least, the developers wrote their own code, and you look at Monero and it's like, I know the Bitcoin code base fairly well. And when I look at Monero, it's like everything is different. Like they wrote the whole thing from scratch, and like they thought about privacy differently, transactions differently. Like they don't even really have a smart contract language in that particular coin, and they did it for a very good reason. And I see all of these innovations, so I have a lot of respect for them. Zcash, very similar, right? ZK Snarks is a very different animal than almost anything else in crypto. You look at something like Decred, those guys wrote BTCD, one of the cleanest, like most readable implementations of Bitcoin out there. And they utilize that to, try to solve some problems they, doing like with governance and things like that. So I have a tremendous amount of respect for a lot of those developers. But like what's it all for? I don't know. All right, like I don't know why they created it or what it's useful for or whatever. And the market's still trying to figure that out. It looks like Monero sort of found a niche in the darknet markets because you can't really trace it. And if people want to sort of like launder their Bitcoins, what they normally end up doing is like shape-shifting it to Monero, doing one transaction and shape-shifting it back. And then, your Bitcoins have like no, that like no, hidden, it's more or less private at that point. So, I don't know, like my bias is towards, things being scams. I'm open to the possibility that there can be other, like ICOs even that are useful. But, like I said, it's something that they're going to have to prove to me instead of me just sort of giving them the benefit of the doubt.
It's interesting you picked those coins because those are a few of the ones that I would say I'm most interested in. Especially really like the privacy coins just in general. And then, for Decred, obviously the hybrid proof of work, proof of stake system that they've got. But I actually just want to quickly ask you this about Zcash and Z Classic, because I'm not sure. I'm sure you've heard of Z Classic, the fork that just takes away the founders' rewards. It's baffling to me that Zcash is so much bigger than Z Classic. Because is Z Classic not just Zcash, but like, I mean, objectively better because you're not paying 10% founders reward. I mean, it's actually really 20%, right? Because of the time it takes for the. I'm not a dev, man. You guys are crazy.
You're talking about the dev tax, and I'm morally opposed to a dev tax because I think people should voluntarily give their money to the developers and not be forced to give it, right? Like, this is my objection against taxes in general. I don't like being forced to pay for anything. But that said, why is Zcash worth more than Zclassic? And that is an excellent question, because from a technological perspective, they're identical. From an economics perspective, Zclassic is clearly better. So why is Zcash worth more than Zclassic? The answer is because of the social community, right? There's a community around Zcash that's bigger. There's a development support group that's bigger. There's an investor group that's bigger, and they compose of the social community around it. And it's hard to think of cryptocurrency in this way. But it really is a social experiment, and it's nothing without the community. You can have sort of like economically rational and technologically feasible attacks against Bitcoin, for example, but they're never executed because there's a social community that sort of protects it. And that's the thing about Zclassic versus Zcash, is that there's a much bigger community around Zcash. That's not to say that it will always stay that way, but at least for now, that's the case, right? And people trust Zuko. He's the creator of Zcash. Is he going if Zclassic becomes bigger, is he going to be interested in Zcash anymore? I don't know. If I were Zuko, I'd be like, not interested. If you guys don't value this, then yeah, I'm out. And that may very well be the case. And that's sort of like the way people think about it, and the way people think about it affects the price. And that's, that's more or less why I don't know. I mean, Zclassic's an interesting idea. I mean, I think that's by Red Creighton, and he's done quite a few things in this space along the same lines.
He moves along rather quickly.
Yeah, there was a similar project with Ethereum called Aetherium, which so I don't know if you remember what happened with Ethereum back when they did their pre-sale and everything, but they pre-mined a ton, right? Like, because they wanted to fund this giant development team and everything else, and they paid them all in future Ethereum tokens. So Peter Risen, who's now doing Bitcoin Unlimited, ironically enough, he proposed something called Aetherium. It's Ethereum with like that little AE symbol at the front. And he was like, okay, well, I'm not going to give any of the reward, but I'm going to take the exact same code as Ethereum. And again, that didn't succeed. And like I don't think he ended up even implementing it, even though I don't think it's that difficult. And the only reason was because there wasn't a community around it demanding it. The F-heads, right, like the people that are really into Ethereum, they're not going to go abandon it for this other coin. So the community around the Ethereum,
unless it's Ethereum and not Ethereum Classic, but that's a little bit of a different story entirely.
Yeah, that was interesting because that ended up splitting that community in some small way, and that sort of like predated the Bitcoin Cash hard fork. So yeah, it's all coming back around again, right? Like we learn something every time. But that was what happened with Aetherium and why that never got off the ground, and this is the same reason why Zclassic isn't as popular.
Well, I'm definitely on the Zclassic train. I've never owned a Zcash. When I heard about the Founders Reward, I was like, I'm out in this one. But
you don't like taxes either, right?
When possible, man, whenever possible. I do think what Monero is doing is pretty cool too. I really like almost all of the privacy ones. I think are cool. Let's talk about Decred. So you're on your channel recently. You made some comments about proof of stake and why you didn't think that it really worked. So can you maybe expand on the problems with proof of stake versus proof of work, and then also potentially talk about, if a hybrid system can make some sense?
So let's talk about both. So starting with proof of stake, if you think about sort of the cost of creating a block, right? With proof of work, the costs of creating a block are pretty straightforward. It's however much hashing power is in 10 minutes times the cost of creating that hash power, or like per second or whatever. Like you can calculate it pretty easily. You have power costs this much, capital equipment costs are this much. You have to probably pay for a few workers to make sure that these miners are going and not breaking down, stuff like that. You can pretty much calculate it pretty much straight up, and you can calculate the cost of creating a block. Long term, the cost of creating that block trend towards exactly how much the reward is, right? Because otherwise it's not profitable, and then the miner stops mining. And if it is profitable, new people come in to take that margin away from you. It's just economics. It trends towards that exact price.
It's kind of beautiful in a way, actually.
Yeah. What's not obvious is the same exact mechanism happens for proof of stake. So a lot of people think, oh, you get proof of stake for free, right? Like you get to mine blocks for free. No. It does not work that way. If there is any human action that can result in me having a better chance at getting the reward, I am going to do it. And in fact, I will be willing to spend up to the reward from the block to get to it. And that might mean like shutting down somebody's computer. I don't know, getting loans so I can get have a larger stake. It might be doing any of those things. And the price, again, trends towards that same thing. What makes people feel good about proof of stake is that it supposedly doesn't waste the electricity. But how do you know? You don't really know, because long term it trends towards the same price as the cost of the block. So you don't the cost of the block trends towards the reward of the block. And you don't know what measures someone will take. Maybe it's DDoSing everybody else, right? Like that has a stake. So they don't create a block, so they get disqualified. So I get the block or something. Like there's many ways in which proof of stake can be gamed. And if it can be gamed at all, then I as a staker have an incentive to spend money until up to the threshold of the reward of the block. And you don't know where that comes from. And this is more or less laid out in Paul Stork's paper from like 3 years ago. I think he wrote something in 2014, maybe. So it's like maybe 4 years ago, about exactly this, is that economically speaking, they have the exact same cost. And long term, it always trends towards that same cost. And people seem to feel better about proof of stake for some reason, because the costs are obscured more or less. Whereas proof of work, it's clear. And his argument is we should actually prefer the thing that is much clearer, because from an economics perspective, you want to know where the costs come from and not have it sort of be hidden and like, people doing nefarious things like reorging blocks or whatever. That's just one of the objections. There are other things like stake grinding, which I got into in that video. Please take a look at it if you're curious. But that's my analysis of proof of stake. Now, with respect to Decred, they have a hybrid proof of work, proof of stake system. And the proof of stake system is specifically used for voting. So they have on-chain governance. And if you lock up your coins, you have a chance to get to vote on some sort of issue, right? Like a recent one was, should we do Lightning on Decred? And if the vote comes out yes, then the developers would work on Lightning Network and making that work. So it's an innovative model from a governance perspective, but that's what the proof of stake is used for. That said, the reward of proof of stake is like, a couple of Decred coins or something once a month or something like that. If you have one ticket, which costs like 80 Decred, so it ends up being like, 2 or 3, I don't know, 4% per month if you do it right, and annualized that ends up being a lot. But long term, that reward and that cost are going to converge. Now, what that exactly looks like, I don't know. But that's what they chose to do. But at least it's secured in addition by proof of work, so you can't really roll back blocks, and stuff like stake grinding isn't necessarily an issue. But yeah, that was sort of my point in that video about why I didn't like proof of stake.
couldn't at least a couple of those problems also be issues with proof of work? I mean, you talk about DDoS attacks. Is there a reason why that, proof of work, it wouldn't be susceptible to that? Or, taking out loans to try and increase your stake versus taking out loans to try and get more mining equipment and you have more computers and hardware. Aren't some of these problems going to be uniform across both?
Well, those aren't necessarily problems. I'm just pointing out that the cost and reward will converge, right? And people have this weird notion that proof of stake is entirely free, that it doesn't cost anything to anyone other than locking up your coins, when that's not the case. You have lots of costs, and the costs only get as creative as the people that are trying to gain money from it. So that's I heard somebody even at Satoshi Roundtable saying, well, with proof of stake, it doesn't cost you anything, so et cetera, et cetera. And he made this conclusion. I'm like, that's not true. There's lots of costs that you can have. And if human action can affect something, then I'm going to spend money to go and do that. So, there are more problems than that that we can talk about with proof of stake. But that's like from an economics perspective, it's very, very straightforward. Reward and costs will always converge, and if you don't believe that, then you're probably living in a communist country or something.
Bang, bang. All right. So quick shout out here. Raphael, thank you for the $100 donation. Much appreciated. Thank you very much. But I'm not entirely done with proof of stake here. So how do you feel about Ethereum moving over to proof of stake?
That would be a very interesting transition. I am really curious to see what happens. I'm glad it's not happening on Bitcoin, I can tell you that much. And yeah, I mean, if you're a miner on Ethereum, what are you gonna do? I'm gonna guess that they're going to resist that. Right? Like there's a group of people that are very clearly motivated to resist that hard fork. I mean, Ethereum has a lot of problems, and this is sort of adding to it as far as I'm concerned. But I don't know. Well, I'm curious. I don't know the future. I don't know how it's going to play out. I will say though that the economic laws don't change because you move to proof of stake. Therefore, people will be doing things to get that stake reward. How that affects that economy, I have no idea.
So when you say that Ethereum has a few problems, I think Ethereum is, it's the second largest coin. It's the second largest currency. It's got a ton of support. Obviously, a lot going on with the development. Obviously, really cool things you can do with the platform, like breed cats. So like when you say it has a lot of problems, I mean, I think that there are many people that are very bullish on 2018 for Ethereum. Why do you say that it has so many problems, and what are those problems?
Well, first of all, it's centralized, right? Like Vitalik Buterin gets to say whatever if what he says is more or less law, and we saw him sort of act that way with the DAO. He got to dictate a bailout for stupid people that invested in this really complicated thing that they didn't understand. And they lost money. He said, I'm going to bail you out, and we're going to do a hard fork. And that, of course, led to Ethereum Classic. And who's to say he won't do that again, right? Like, and he has that kind of power, and he's shown it over and over again by doing, these hard forks where, everyone was sort of afraid to go off on their own. So I would say the centralization is the biggest one. And if you got into Bitcoin, like you did, Doug, with poker and sort of like the government, the U.S. government sort of choking you out of, these sites with dollars. Well, you don't want a third party sort of determining that. I mean, Vitalik might be a good guy now, but who's to say that Russia doesn't kidnap his family and then like decide for him which transactions go through or not, or who needs to get bailed out or not, or they're going to print another 100 billion Ethereum and give it to the Russian government. Like, who knows, right? Like, these things can all happen because it's centralized, and they can like say, okay, well, this class of transaction you can't do because this government doesn't like it. We don't know, right? Like with a decentralized system, you can't have that sort of level of censorability. And the unseizability, the uncensorability of Bitcoin is why I got into it. Now, Ethereum has like Turing complete, smart contracts, et cetera, et cetera. I would say that there are more problems with that than there are sort of innovations. If you look at the biggest innovations of Ethereum, they are just two things. It's ICOs and sort of like I think they're called like ERC 729 tokens or something like that, but more or less like CryptoKitties, right? They don't use any Turing completeness as far as I can tell, right? Like you can actually do ERC 20 tokens on Bitcoin. In fact, a lot of people did. It was called like Mastercoin, Omni, and Counterparty or whatever. Like and colored coins, from which Vitalik got his ideas for Ethereum. Like it's not hard to do those things because it doesn't require any Turing completeness. There aren't any loops, or they're not necessary. And that's their big innovation. Like people don't really use the Turing completeness. I question the utility of it, I guess. But it increases the attack surface tremendously, so it makes it more vulnerable.
It's a little more difficult for me to understand Ethereum as well as some of the other ones that are kind of similar to it, like Neo and the other ones. But I think my understanding, and I actually would love to get a really legitimate Ethereum dev on the show. If when you guys know somebody that wants to reach out, I would love to have that conversation. But my understanding is that it's more about the creation of the platform, right, rather than decentralization. So like I don't think that their argument is that like they're not trying to be store of value. They're trying to be more the utility of the network, in my very limited understanding. What do you think about that?
Yeah, I would say that's correct. They're definitely sort of marketing to a different segment. And I don't know. It's kind of curious to me that has any value. if it's not money, or if it's not store of value or something like that, then what are you using it for? Like I've heard the phrase like Ethereum is gas to Bitcoin's gold or something like that. It's like, or oil to Bitcoin's gold. It's like something completely different. It's supposed to power something else. What's it powering? Right? Like what's it doing? I guess ICOs, but again, you can do that on Bitcoin, and you've been able to do it since 2013. But like props to them. They have a community and a marketing machine that's able to sort of take advantage of the sort of latent investor demand and asymmetric payoffs that they've been able to take advantage of to make their ICO valuations, not to mention the coin itself, go through the roof. But it's not anything novel per se, and maybe having a different focus in that way is good, and it's been successful for them. But I wouldn't say it's that's something that they've done, is that they differentiated themselves sufficiently from Bitcoin. Good luck to them. I don't know. It's something I'm not that interested in, if that makes sense.
But so I guess I'm a little confused then, as far as like the smart contracts go. I thought that made the process of having these ICOs substantially easier, and it allows you to build things that you couldn't without that. So what do you mean by Bitcoin could also do that aspect too?
All right, so Bitcoin has a smart contract language, and it's called Script. Ethereum has a smart contract language. It's called Solidity. The only and you could do you can write different programs in different languages, right? Like this is familiar to anyone that's coded. You can write the same program in Java as you can in Go or Python or Perl or C++ or whatever. So you can write. The only difference between Solidity and Script is that Solidity is Turing complete. That means you can have loops and stuff. So it's in theory more flexible, but it's also much harder to secure. So for example, the DAO hack happened because there was a vulnerability in the smart contract, which had lots of loops and stuff like that. And somebody figured out if you do things in a different order, then you can sort of drain money out of it. And security vulnerabilities are not what you want to have with financial instruments like that. And that's kind of what led to their bailout and everything else. ICOs don't use any of the Turing completeness, as far as I know. And it's because it's a relatively straightforward thing. You issue a bunch of coins, and like people have them or not, and there's no looping involved. And you can do the same thing in Bitcoin using something called color coins and Counterparty and Omni. And like Counterparty famously had like rare Pepes, which are not that different than CryptoKitties, right? Like the whole you can do similar things. And actually, I'm not sure if Counterparty has Turing completeness, but you can do things like that on top of Bitcoin just fine. It's that Ethereum sort of focused on that. Bitcoin was more focused on being money. Ethereum was more focused on being a platform for ICOs, more or less, and that's where they've succeeded.
Interesting. Okay. Yeah, definitely learned some stuff there. From my perspective, when I look at the Ethereum Classic fork, I remember when I looked at it and what happened, I was like, man, like even though it sucks that like the hacker got all this money, like I feel like idealistically Ethereum Classic got it right by like, we're going to stick to like the premise of what we're doing here and not change it because people lost money. And so I got really pumped up. I bought a bunch of ETC. I was like, all right, let's go. And then like nothing happened for months and nobody was using it. And I was like, let's go. And then I slowly was just like, what am I doing? Like you can be idealistic all you want, but if people aren't actually using the platform, then it doesn't really end up mattering.
Yeah, it's again about that social community, right? Like if you have a social community, then people are going to try to find use cases and serve that community by creating companies and things like that. But if you don't have that social community, oh man, good luck creating one, because that's one of the hardest things to do in crypto.
Well, it's always tough to create a community, which is why I'm so glad to have you guys. Thanks for tuning in today. Always appreciate you guys stopping by. Hit the thumbs up button. We got more podcasts, a little more today, as well as some coming up in the future weeks. So hit that subscribe button. Thanks again for joining. By the way, Raphael, thank you. You're just spamming $50 donations. Definitely appreciate it across the board here. All right, let's get down into the serious question that I'm sure a lot of people are here for, okay? Do you know any cheap, hot altcoins that we can get involved in? Cheap and hot, so I'm thinking maybe less than $1.
So you're into the unit bias thing too, right? Like it could have 1 trillion coins at $1, and you'd be okay with that?
Well, so here's the thing. Like I feel like I'm a crazy person, like yelling like it doesn't matter, but like people are ignoring me, and I'm like, it doesn't matter. So like I always say that to my audience that it doesn't really matter. But then I just get these comments, and sometimes they're even from like people like I know or like well-known people, like, hey, like, I'm thinking about picking up something cheap like Ripple. And like I like respond to it over and over again, and it doesn't seem to change. And it just doesn't seem to change, Jimmy. It just keeps happening. And then I just see these posts on Reddit where it's like coin success by price, and it's like the cheap hot ones that are just blasting off. And then like as I'm like yelling off in the distance, like, never forget that they're not cheap. Someone's like, should I get some Tron? And I'm just like fighting people off. Like it never ends. It never actually ends.
I'm sure you're aware of cognitive biases, especially being a poker player. And, if you have jacks, there's a temptation to go all the way, right? Like, especially amateurs, they'll go all the way to the river with you with jacks. Doesn't matter what the board is. They just feel like they should win because of jacks.
Doug does that too. So, I mean.
Okay, Doug does. So I think it's the same sort of bias out there. It's called the unit bias. If you don't know, people like to have a whole of something instead of a tiny bit of something. And you get a whole Ripple for like $1 versus a whole Bitcoin, which costs 9,000. So they like having a whole like 5,000 whole Ripples than 5/9 of a Bitcoin. So, it is a cognitive bias. This is one of the things that I wanted to do with BIP 176 and converting to bits notation, so people feel like they're getting more. We'll see where that goes. But yeah, I hear you on the cognitive bias. I have a feeling that either some people are going to get really, really rich, like the Ripple founder. I can't believe.
What do you mean going to get, man? He's already there.
Yeah, he's already gotten it. I hear he's pledged a lot of that money to like foundations or whatever, or charity. So I don't know. I don't know if it's whatever, but Oh man, it just bothers me to no end. It's like people can't do simple math, like figure out what the denominator is. There's a denominator, people. Like you can't just look at the numerator. You want to look at the percentage, right? Like how much of it you actually own.
Yeah, that concept is a very difficult one to teach people, especially when, like, I look at YouTube and it's getting less like this because a lot of the channels that were doing that stuff, either they were shilling BitConnect and are now in hiding, or they got made fun of enough by to have to seek some shelter. But when people are out there making videos like telling people you want the next cheap hot thing and like perpetuating that unit bias, it furthers the problem. It increases the issue that we have. Like, always know when you're buying something. This is just a good life tip from me, guys. If you're buying something, know how many of them there are or are going to be. just a simple thing. It's always a good idea to kind of know, because then you understand like the demand. Like, you buy a Ripple, well, there are 100 billion Ripples, so it's way different than buying a Bitcoin. But then it becomes a thing. It exists not because it should exist, but it exists because people do it, which is a perfect segue in the technical analysis.
You want to talk about technical analysis?
Let's talk about technical analysis. All right, let me say my piece first, and then you can go for it. So, this is probably not going to be Tone Vase approved. But so here's my take. Look, I absolutely think that people do have tendencies, and I do think that people will react in certain ways to information. And I do think that there are likely some trends over time. So my argument about technical analysis is not that it is inherently wrong or inherently incorrect. My argument is that its gains are very, very slight, particularly when you're looking at just specifically predicting price and like, what's going to happen in the future. I think the gains are extremely slight. And I think that a lot of them are because people perpetuate these same things, the same knowledge, these same stereotypes, that when the triangle says this happens. And if enough people are drawing the same triangles, all of a sudden, like, those triangles become kind of legit because everyone's drawing the same ones. So I would view technical analysis as like, I'm gonna just say 10% legit, 20 to 30% group thinking and herd mentality, and 60 to 70% complete and utter dog shit. What are your thoughts on technical analysis?
I think I would have said the same thing about a year ago until I started hanging out with Tone. And I'll tell you why I think at least some of it is legit. And it's because I know that there are human cognitive biases, right? Like, there's definitely something called loss aversion. People get more pain from loss than happiness from gain. So this is why things go up slower than they come down, right? Like when it crashes really fast, whereas on the run up, it happens very slowly. And that's because of loss aversion. As soon as people think they're going to lose money, they sell, right? Like, and this is why there are certain like support levels and things like that. This another technical analysis, sort of thing is you look at sort of where a lot of volume was, right, around a certain price level. And you know that a lot of people bought right around that. So say like, 5,500 for Bitcoin, right? Like a lot of people bought around 5,500. So this is where sort of Tone will be like, okay, that's sort of like a support line because a lot of people bought around that. And what happens around those support lines is, well, if it gets below that, then people start having loss aversion. So they go, oh my gosh, I got to go sell because I hate losing money. Even though, like, from a rational perspective, you can lose a little bit of money, and that's okay. I'm sure you've heard this. You've found this in poker as well, right? Like, people have massive loss aversion.
100%, 100%. Booking a win is a serious thing in poker. People feel like, I have to make sure that I end here winning. And so if you see someone and they're up like a little bit towards the end of the session, I would almost always advocate to be a little extra aggressive with them because unless they're a pro, I'm talking about like with the weaker players, because they want to be able to say, I won money today. I made money playing poker today.
Yeah, exactly. So, and people do the same exact thing with stock or any asset, is that they want to be able to say, I made money. So if it's like that support level ends up being critical, because for some people, they're going to react with, okay, I bought at this price. It's been above this price for a really long time, and I am now, I've been meaning to buy more. So now it's hit this price. I'm going to buy more now. So it'll either bounce off or drop quickly. If it drops, it's because everyone that bought at that price has massive loss aversion. So they want to prevent that feeling. And there are lots of things like that, right? Like with triangles and, that tends to be like, there's resistance or support or whatever. And it's trying to go in one direction. But, as soon as people feel, and it comes to a point where people either feel loss aversion or fear of missing out or something like that. So there are psychological things, I think, behind these things. And I'm not sure they're that well explained yet. But at least hanging out with Tone and figuring out, like, sort of, he does a lot more like time analysis, right? Like figuring out like how many, like he calls it the random number generator, where it goes all the way up to 9 or whatever. But there's a certain amount of time that people feel comfortable doing something, right? Especially if they're watching at a particular time scale. And at a certain point, it's just kind of like, okay, well, I still feel comfortable. And then it feels like it's gone on too long. And I think that's what that indicator is indicating. I'm not really entirely sure.
Honestly, Jimmy, that explanation does not sound good to me. It sounds like the people in poker that are like, well, there hasn't been a lot of queens on the flop for a while, so there's a queen coming. It doesn't mean there's a queen coming, Jimmy. There might not still be a queen.
No. It's but you do realize there are people that think that way, right? Like,
yes.
So and it's like a lot of technical analysis. If enough people feel that way, then it will sort of happen. So that there's a comfort level with, like, at a certain point when things have been going up for a long time, then a lot of people start feeling nervous. And I think that's what, like, that 9 count thing does is, okay, it sort of like shows how nervous people are. And then at that point, there's like a pullback or something. And it works the other way, where it goes down, 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 down. And then there are sort of greedy people at the bottom that are like, okay, I feel like I have to buy. Bam, then they buy. That's, I think, the idea behind those. Not to say that all technical analysis works. It's just that there are some that seem to map to human cognitive biases that at least make sense to me.
Well, so this would be my counter argument, and I actually agree with that. Like, I gave the meaner and more angry version of that explanation earlier. But like, okay, so I'm looking at Bitcoin volume, right, in the last 24 hours, and it's at 6.3 billion. Okay, how much of that is from individual hodlers or buyers or sellers thinking like the market looks good or the market looks bad, versus how much of that is from institutional money, from large financial, I mean, really institutional money? How much is it relative to each other? Because I don't think there's a hedge fund that's like, the coast looks kind of clear now, we're gonna like, I think people are doing, I think a majority of volume, once it reaches that point, is coming from people that are really strategically trying to win money in the markets, and less based around those biases. So I would say as the market becomes more individual people, those aspects become more true. But as it becomes more strategic and increases in volume, I feel like it ends up having less usefulness.
Yeah, I don't know how, like, there's a ton of people that call themselves like degenerate gamblers, right? Like that just trade like 30 times a day and come in and out of positions. A lot of them like just clear their positions before they go to sleep, open their positions when they get wake up or whatever, look for patterns and do all that. You have to realize, like, compared to stocks and other equities and stuff like that, Bitcoin is like the Wild West, right? Like, there's a lot more individuals in it than institutions. You go trade like Apple stock or something like that, you're going up against like hundreds of high frequency trading firms. With Bitcoin, you're maybe going up against 1 or 2, right? Like there aren't that many, and it's all sort of spread out. in many different exchanges. So there's a lot of arbitrage opportunity going back and forth. So a lot of that volume is honestly probably traders and arbitrage and market makers and stuff like that are probably not necessarily, like you said, like paying attention to the technical analysis. But there's a significant amount, I think, that are from individual traders, at least compared to stocks and almost everything else.
That's almost certainly true. Like there are more individual people. I mean, this market is much smaller than the stock market by a good margin. All right, so here's what I want. I want to ask you one last question here before we call it a day. I want you to tell me, out of the top, let's just say 10 or 20 currencies, which one is the shittiest? Which is the worst one? Which is like, which one would you rather put your money in US dollars under your bed? Would you rather have than have to buy?
Oh boy, there's so many. Let's see. I'm looking at the top 20.
Only pick one. It's one currency or bust. You have to pick your absolute, and we're gonna title this Jimmy Song hates the currency that you pick here.
Oh gosh, so hard to pick. There's so many. I mean, I don't even know about a lot of these. I still don't really know that much about NEM or like EOS or all right. So I do know something about Ripple, and I've always been sort of like an anti-Ripple guy. So I'm just gonna go with Ripple because it's like the most centralized, and that's why.
Yeah, from my research of Ripple, I don't understand. I don't understand how it's a thing. It's like completely centralized. They can just like stop your ripples from being transacted, right? They can control it.
Yeah, it's exactly like fiat in that way. Yeah.
So it's a centralized currency that they control with tons of them that they own 62% of.
Yep. That sounds about right. Yep. And somehow like some banks are involved or something, and apparently that excites people enough to go buy it.
But bro, banks though. Well, from like a coding standpoint, is there like technology there behind Ripple or?
I'm sure there is. I haven't seen anything open source. I don't know. I know Jed McCaleb like forked it to make Stellar, which is actually like number 8 right now. But yeah, I don't know. I mean, I think they're more or less similar. So I guess I could also say Stellar, but you made me choose only one, not more than one.
I actually, one of my good buddies, Ryan Fee, he was trying to explain to me why he thinks what Stellar is doing is actually pretty cool. As opposed, it's like, I'm going to try and quote him. I think he said, it's like Ripple, but without all the sucking. But I really don't know.
It's like, okay, well, I'm gonna have to take your word for it because I haven't seen any of the code. I don't know. It's centralized. I don't like centralization. And if you like centralization, then why'd you get out of the dollar, right? Like that's, I don't know. Maybe you believe that this dictator will be different or something. I don't know.
Well, so I mean, my understanding is that like I think that just because they're not as decentralized and like almost pure as Bitcoin doesn't necessarily mean that they're bad investments. And I also think that a lot of these projects are working on cool things that its technology can have a great impact on the world. I think that, like you said, the majority of them are more about trying to get rich and like the prosperity of the people that are creating it to try and make money. But I don't think that makes them all inherently bad just because the people that start them will make money. I think it's inherently bad when you hold like 2/3 of the supply and it's like closed source and you just control the whole thing, and it's just kind of like
it's hard to say who's worse or whatever. I don't see that level of centralization as I mean, I guess it could be good. There've been good dictatorships, I guess, in the past, monarchies or whatever.
I feel like this conversation is going somewhere dark. Let's probably time to put a pin in it. when the conversation reaches the there are some good dictators, I think it's like probably time to wrap it up. All right, guys. So I just want to say thank you to Jimmy Song for stopping by today. Obviously, we learned a lot. We covered a lot of ground. I think it's cool, just like getting to hear what people that really understand what's going on have to say, to try to understand things more on at least a small technical level, but also just in terms of what's happening in the space. Honestly, I think Jimmy is one of the smartest guys that I've heard, at least on YouTube. When it comes to talking about these things, it's a really low bar, but yet he's still cleared it easily. So if you guys have, if you ever want to hear what Jimmy has to say, he does pretty much daily videos over on his channel. I put the link in the description below, so you can follow him there and learn more from Jimmy.
Thank you so much. It was an honor being here.
Awesome. Thank you for joining. All right, that's going to be it here for our first ever podcast. Now, I'm talking to you, lazy guy who's not yet subscribed to the podcast channel, thinking, I'll do it later. Do it now, because we're going to have our second guest next week. Jason Les is going to be joining us 3 p.m. Hopefully we get some pretty, we get some more speakers here that know what they're talking about, that can maybe kind of talk about some of these currencies that we know less about. I'd like to learn more about Ethereum. I'd like to, be able to ask some of these questions that were raised today, some of the problems. I think, raising awareness, raising understanding kind of helps everyone. So, if you know someone that's a developer or a personality for some of the bigger currencies, reach out to me. Let me know. Happy to have some more people on the podcast. We're going to try and do it every week. I'm going to try and do it every week on Monday. But, we'll see how that goes. We're going to start off with Jason Les next week, and we'll go from there. Make sure to subscribe over to that channel. And that's going to be it for me today, guys. So we're going to go ahead and wrap it up here. One last thing before I go. I'm releasing a new poker video. I think it's going to be a pretty funny one. So if you actually follow me over on the poker channel, might want to check it out. At the conclusion of this, I'm going to be publishing it. All right, guys, that's it for me. Thanks again to Jimmy Song for joining, and I'll see you guys again soon.